This week on By the Numbers, here on our free preview on YouTube, join us as we take a look at the housing market and is it getting worse? Sit back, grab a cup of coffee, and join us as we take you through the numbers. Hi, Lauren.
Hi, Lindsay.
How are you?
I'm doing so great. How about you?
I'm good, thank you. Did you have a good weekend?
I had a really fun weekend.
Yeah.
We went out to the seacoast. There was like a street festival with all food vendors and, banks giving things away and just kind of community tables. I was laughing though because this will come as a surprise to exactly no one. I'm such a nerd. I love public radio. And so my local public radio station had a tent and they were giving away stickers and it was great. But they asked me, because I clearly looked a little enthusiastic, they said, we're recording a segment just to, why do you love public radio for our upcoming fund drives? They're going to piece a bunch together. So I said, yes, I would love to do that. So I have a little clip of me, just saying I'm Lauren on HPR this week. Well, I thought this was the best. My husband, later, as we're walking away, he goes, why are you being so excited about this? It's the third largest broadcast station you've been on this week.
Right.
Because I had an interview last week for both Reuters and Bloomberg Radio.
But this was the one that got you the most excited.
Exactly. This one was in my heart. The others, I was just previewing the jobs report. Whatever. That's work. This was personal. I don't know what it was. But that was my highlight, which is a nerdy highlight, I know.
Lauren, our local celebrity.
Somehow.
Oh, gosh. A weekend on the seacoast, though. And you got a little bit of good press.
Yeah, exactly. But it sounds like you had a much busier weekend. How was yours?
Yes, as we've talked about many times before, my house was going on the market at the beginning of June. So it went on the market on Thursday.
Yikes.
And we did open houses Friday night, Saturday, Sunday. So I basically took the kids and the dog and I moved out for the weekend so that I didn't have to deal with cleaning up too much. Had to kind of, hold back on pulling up my security cameras to see how many people were there. So I turned off the notifications.
Good for you. That's hard.
The market do what the market was going to do. But I have a marketing background, and I was super into how the pictures were done. There was drone footage that was really exciting to me. So I brought you a copy of my home sale.
Oh my goodness.
Flyer, I guess.
Lindsay, your house, first of all, is beautiful, and I love the landscaping.
Thank you. So, pro tip, call your mom and your aunt, throw bark mulch over the weeds when you're selling your house because you don't want to have to put too much work in.
Oh my goodness.
But yeah, it was fun. My whole, they say it takes a village. The whole village came out and helped me get the house ready to put on the market. And it was an interesting process. I bought this house in 2013 and I was a spring chicken at the time. So this was my first home that I purchased.
Oh, goodness. And so bittersweet.
Yeah. And my first to sell. So this is all a bit of a new process for me.
That's right.
It's definitely been interesting, nerve-wracking to say the least. And then obviously I'm going to be on the other side of it too. So we spent the weekend looking at houses.
Oh, gosh.
And so I feel like I kind of am a good test subject for everything that we talk about in here. And I know you've joked before that I use our time here in Studio A to get free advice, which I totally do.
Which good for you.
Yeah.
If that's what you're doing.
Hey,
it's great.
You gotta, strike while the iron's hot. So, but I thought, when looking at our articles that we had and picking an order of go today, why not just continue on my free advice crusade?
Perfect.
And start with our first headline.
Well, if you're worried about it, someone else is, and it really is.
That's what I mean, yeah.
And it's so top of the everyone's brain today. We find so many articles about the housing market because this is a hot issue. So
right.
I'm glad to get the on the ground kind of economics from you to say, how is it going? How are the showings? What are you looking at? But you're right. We do have another article this week on housing.
Yes. So I definitely resonated with this. My agent was calling me this morning with offers, and we were going over the offers on my drive-in this morning. And she said, hey, I actually looked up your show last night.
You're kidding.
Yeah. And I was like, I was, you get that little moment of like, oh my gosh, no, you didn't. But then you're like, wait, that's what we're here for.
Yes.
So I thought that was so cool that she knew that I was part of this awesome platform. I had talked very little of it, but she went out in search of it and she found last week's episode on YouTube and she
shout
loved
out
it.
to, what's her name?
Her name is Celine.
Celine. Yes. Hello, Celine.
Hopefully she's watching this week.
Oh, maybe not.
So we actually talked about this article this morning.
Oh, awesome.
So I used her a little bit as a warm up for By the Numbers.
I love it.
Today. Yeah. Jumping right into our headlines, this one, the housing market gets worse for buyers.
Yes. So I don't know if that's good news for you or bad news for you. You're on both sides of this equation.
Yeah, it's definitely a little bit of a whiplash when I'm reading these things.
Yes. So, well, and again, I know you're on both sides, so you're in a very unique position, but we wanted to cut through this headline, say, is the housing market actually getting worse for buyers? And in this case, it's kind of a mixed bag. So I hope you find some good news, and just, I guess, if there's bad news, at least something to be prepared for you and anyone else who's buying or selling a house.
Yeah, absolutely. And as I read this, I truly, probably because of the situation that I'm in, but I truly read it as someone that doesn't sit in this seat, someone that doesn't work in economics. And I'm very fortunate to have your guidance and the guidance of your team. And that's why we're here, so that you too can tap into the guidance here at ITR Economics. So I'll start with a quote that was kind of how the article itself started. An economy that is too hot is not good for interest rates. Hence, the latest news of some cooling in the labor market could mean the topping out of mortgage rates this week before some sustained declines through the remainder of this year. Factors making the housing market worse is kind of where this article started. And obviously what comes to my mind is interest rates, kind of like the headline had alluded to. But I imagine for most of us, the interest rates is the headlining topic. So, but it's truly splitting hairs when it comes to percentage points and potential rate cuts later on in the year. I know that you've shared with me that it could be something like 0.5 percentage point. What is that really going to mean?
Yes.
What I want to know, and what I'm sure most folks in a buying situation want to know, is what is my monthly payment? I keep having that conversation with my mortgage broker. I don't care what the percentage is. I don't care about the PMI. I don't care about buying down points. Like, here's my bucket of money. Make it work in the best, more of a down payment, more buying down points. It's this crazy game. But what it comes down to is, what is that monthly payment?
Absolutely. And that's where we find the housing market right now. We still have strong affordability constraints. Now, you mentioned interest rates. That is the biggest contributing factor to affordability. We look at house prices, and I have the numbers for that in a moment, but it turns out that the actual price level doesn't change your monthly payment as much as interest rates do. Right. So when we really talk about interest rates, coming from where we were only a couple of years ago with very, very low, historically low, very close to zero interest rate policy, to be now at 7-ish%. I'm sure you're seeing hopefully a little better than that.
I think it's about 6.25% is what I'm seeing
right
now.
Okay.
So that seems better than...
a little better. We have seen in the past couple of weeks and maybe even month or so, a little decline in rates. Now we'll talk about the labor market, which you brought up in that quote. We're going to talk about that at the end of our segment today. Because that is the wild card, right? Will the Fed cut rates or will they not? But to your earlier point, yes, if they cut by 50 basis points in the second half of this year, I think that's a very reasonable base case. Will that really mean I can buy a house that's $100,000 more? No, it's not going to do that much for our affordability.
Right. And so you're looking at interest rates, you're looking at that monthly payment, but then let's talk about other factors that do play into that and kind of, move that monthly payment a little bit. And we're talking about the home prices and where home prices have landed. Home prices went up by $12,500 from April to May, which I know we always talk about not hanging our hat on a single month and what is really the impact of that. It's obviously June. I went on the market in June for a reason, so it's no surprise that from April to May, it went up $12,500. Do we have an update on the median home price? I know that we talk about that a lot.
We talk about that a lot. Yeah. And so again, U.S., these are new home median sale price. So this doesn't include existing stock, just new homes to set the level.
Okay.
In that data, our April number was $433,000. Now, on a 112 rate of change, so this April compared to the April 1 year ago, that was a positive growth rate, up 3.9%.
Okay.
However, once we zoom out a little bit, take our 12-12 rate of change, our annual growth rate, as we term it here at ITR, in April, that was actually down 5.7%. So it seems like the housing market was a little bit, I don't want to say overvalued, that's not the right word, but prices had been higher. Back in 2022, we hit our peak at almost $500,000 for that median new home sale price. That has come down, as I mentioned, $433,000 in April. So maybe we overshot the peak. Today, things are cooling off. Not a lot, not in all markets. I don't want to scare anyone.
Right.
But a little bit of pullback.
And when we're talking about that 12-12 rate of change coming down, it's still, I want to remind people, it's still growth, but it's a contraction in the growth. It's a slowing in the pace at which the prices are rising.
So in this case, and we're taking the average price in the 12 months ending April. That was actually lower this April than it was last year, April 2023.
Okay. So pricing, interest rates, that's all with regards to affordability. And this next bit, I'm sure, impacts affordability, kind of the old supply and demand issue.
Yes.
But we are starting to see more supply coming into the market.
Yes. And that for me was the big takeaway from this article. Yes, there are affordability constraints, but supply is increasing. We're getting more stock coming on the market. Now, there are two mechanisms for that. I will start by saying the number of existing home sales is down right now. That has declined. But as we look at the housing stock, and really we in the United States have been underbuilding ever since the Great Recession.
Right.
We've talked about this in the past.
Yes.
So post 2008, the average number of new single unit housing starts was about 750,000 per year. So that's largely underbuilding. If you look at just our new household formations, immigration, population growth overall, we need more housing stock. We see it reflected in, as we've talked about in the past, vacancy rates, just the number of homes listed on the market. So today, to see new housing starts, in April, actually, they topped 1 million units on a 12-month moving basis for the first time in several months. And that's up 13.5% on a 12-12 basis.
Okay.
So we are building more new homes. And as a result, partially of that, we also have more new homes for sale. In April, there were 474,000 homes for sale. That's 13.1% higher than the year ago level.
Okay. So we've also talked about the regional aspect of this, and we're always reminding people that this is, when we look at it, it's from a very macro standpoint, but obviously with regards to housing, there's this regional component as well. But let's talk about, if you have it, where things are hot right now, maybe for those of us who don't have a direction towards the New Hampshire Seacoast plan and are more open to any market where there may be a home and B, maybe affordability is a little bit better.
Absolutely. Here, again, it mirrors some of those population trends that we've been seeing, where people want to be. A couple of markets, I think, were more overvalued than others at the peak. So if we divide this up, we can go state by state. I didn't want to get too far into the weeds today, so I just did 4 key regions. The biggest region in the U.S. is the South. The median sale price in the South in March, that 12-12 rate of change, negative 8.8%. So house prices declining in the South and also in the West, down 6.6%.
All right. Those are some pretty hefty percentages.
They are, especially for the bulk of our housing stock. That's what's really driving the total down. We can look at the Midwest. That was roughly flat, down just 0.4%. I'll call that essentially flatness. But good news for you selling in this market in the Northeast, the median home sale price was up 16.0%.
Wow.
Now, again, a much smaller proportion of the total U.S. That's why that positive 16% isn't really driving the U.S. sum higher.
Right.
But good news for you, I hope.
Good for New England, I suppose. Yes, no, it was a good showing.
Excellent.
So
good.
I had it was a roller coaster. There were moments where I was like, what if the offer is asking? We priced strategically to hopefully get a bidding war, but then I thought, what if I only get asking?
Oh yeah.
And I panicked. And it turned out better than that. So I'm very happy. That's all the time we have for today here on our free segment on YouTube. Remember to like and subscribe. And if you'd like to subscribe to the full-length episode, click the link in the description below. But for now, from all of us here at By the Numbers and ITR Economics, bye, Lauren.
Bye, Lindsay.